They were able to get repo removed as well as the collection. That's a total of roughly about 14 accounts. If you have collections, repos, there's no reason why these items should be sitting on your credit report for years on end.
What's up, YouTube? Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks, and most importantly, how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content, make sure you hit that subscribe button as well as smash the like button. So in today's video, we're going to be talking about the true cost of having bad credit and why you want to have access to financial resources, especially in today's current economic climate. Now, as a lot of you are aware, we're dealing with inflation. Now, I did see a couple YouTube videos, a couple headlines talking about inflation. You're going to be paying a lot more for the same things. That's why having access to financial resources is important, especially for those who might be paycheck to paycheck, or you just don't have enough to sort of bridge that gap. And that's why having good credit is going to enable you to have access to financial resources. But having bad credit, you're going to feel the effects much more because you're going to be paying a lot more, and not having access to financial resources is going to make it harder for you to bridge that gap. Most Americans are paycheck to paycheck. So if your income is steady or even, diminished, and you don't have access to other financial resources, credit cards, lines of credit to kind of hold you over, then you're going to be in a worse off position and your quality of living is definitely going to diminish. That's why I'm always emphasizing having a good financial reputation. So if you have bad credit right now, you're going to be in a worse off position going forward because inflation is here to stay. The price of these items is not going to diminish. It's just going to increase over time. So having access to financial resources will help you bridge the gap, especially in these uncertain times. But I just wanted to give a couple examples of why having bad credit can put you in a worse off position and cost you more. Now, this would be obvious to most people, but I wanted to share some specific examples of the high cost of bad credit. So let's talk about auto loans, for example, right? Now, this is an example that shows you the difference in what you would pay having good credit versus bad credit. And I know there's a lot of people out there who are against, paying to fix their credit and don't realize that by having bad credit, you're going to be paying a lot more over time, right? And this is just an example of a $20,000 auto loan with a 60-month term. So let's say, 6% interest rate versus 26% interest rate. And I know some people might be thinking, oh, 26%, that's extremely high. Actually, if you have bad credit, I remember when I had bad credit, I was paying about 22%. So this is actually, on par with what you would be paying. But, look at the difference in the monthly payment, right? You're paying over $200 more per month. So when you look at the total interest over that 60-month term, with good credit, you're paying about $3,200. With bad credit, you're paying close to $16,000. So look at that difference. I mean, that's a difference of almost $12,000, $13,000 difference that you're paying just in interest for the same vehicle. If you have good credit, you're going to be spending a lot less. So that $13,000, $14,000, whatever the difference, my math is a little off, but whatever the difference is, 12, 13,000, that money could have been put into the stock market or into cryptos, right? So there's an opportunity cost of having bad credit. CNBC put out this article that basically just goes over some of the consequences of having bad credit. So number one, you're not going to be able to go to a lot of the mainstream lenders. And I've been saying this in videos for the past 2 years, right? The major banks, the big banks, the Citibanks, Bank of America's, the American Express, the Chase, those institutions don't have a business model that really caters to people with bad credit. So if you have bad credit, the major banks look at you as high risk. So they're not going to want to deal with you. So out the gate, you're not going to have access to a lot of these mainstream lenders who have the most financial resources available. So for the most part, you're not going to be able to go to the major banks if you need to get a loan or a credit card if you have bad credit. So as I've been saying, some of the alternatives, you have some of the fintechs, you also have some credit unions, but still you're going to have to meet certain underwriting criteria. And unfortunately, when you don't have access to financial resources, you're forced to go to some of these other predatory types of lending institutions where you're going to pay much higher interest rates. So, having bad credit, you're going to have limited access. And just think about it, right? If you have bad credit, that basically means you have a reputation for not handling your finances the way that you should, right? Paying back your debts, paying on time, things like that. So less institutions are going to work with you when you have bad marks on your credit report. A couple other things, right? When it comes to insurance, you're going to be paying a much higher premium when you have bad credit. Another thing too, right? Missed out career opportunities. Now, I used to work in the federal government, and part of a lot of federal jobs is to get a security clearance. And of course, they're going to run your credit, right? They're going to get a copy of your different credit reports. And one of the things about having these types of career opportunities where you're in a position of trust, whether that's working at a financial institution, working for the federal government, they're going to look at your credit score as an indication of your character. So if you have bad credit, they're going to look at that as you not being trustworthy, right? Because they're going to think that if you have financial troubles, you have a bad reputation, and giving you trust, right? That could put you in a position where you might have to compromise your integrity because you're in a tough financial situation, or you just have a history or pattern of not repaying your debts. And so in a lot of cases that could prevent you from getting a job. Another thing too, right? Renting an apartment. You go to any major metropolitan downtown area, right? That's managed by a major property manager. They're going to be pulling your credit, and if you have bad credit, chances are they're going to either not give you the apartment, or they're going to require you to put up additional deposit just to account for that risk. So getting access to housing is impacted by your credit. So if you have a bad financial reputation, that can affect your ability to get housing. And here's the alternative too, because I was in this same position, over 10 years ago, where I was looking to get housing in a nicer area, like I said, where it's managed by a major, property manager, right? Where they're doing all these background checks. And at the time, I didn't have good credit. So I wasn't able to get access to this nicer area until, I improved my credit later down the road. But the alternative that I had to resort to was going onto Craigslist and renting a room in a high crime area, a food desert. So it's like there's a lot of opportunity costs when you have bad credit. You have less choices. So what I had to resort to was living in a high crime area, less access to grocery stores, restaurants, different amenities. It was in an area that wasn't really conducive to public transportation. So there's some trade-offs when you have bad credit, because you have to settle with a less optimal, solution, right? And then also too, when it comes to utilities, right? So if you're having to put down deposits for your cell phone or for your cable bill or for the light bill, electricity, whatever the case may be, because you have bad credit, that's another bad side effect of having a bad financial reputation, which is why you want to fix your credit. As I mentioned earlier, having lack of access. So when you have bad credit, you're not going to be getting rewards cards where you get these introductory bonus offers. You get 0% APR for 12, 18 months. You're not going to be getting those offers. That's not even going to be an option for you when you have bad credit. So part of having good credit, you get rewarded with these bonus intro offers where you can get cash back, or, you get a low interest rate, or you get 0% APR, or you get these bonus cash back where you spend a certain amount and they'll give you a statement credit. So those options aren't going to be available when you have bad credit. And then another very important thing too is delaying your wealth building or even retirement. So when you're paying higher interest, the trade-off is that what you're paying towards interest, that could be going towards building up your nest egg, towards investing. So when you have bad credit and you're paying high interest rate, all that interest rate is going to the finance company. Whereas if you had good credit, you'd be paying a lot less in interest, if any interest at all. And that money that you were paying because of your bad credit to interest, that could have been going towards investing in stocks, investing in cryptos, whatever the case may be. So there is a side effect of having bad credit. And overall, having bad credit is going to cost you a lot more than if you were to fix your credit. So the main point I wanted to get across with this video is that the true cost of having bad credit is way higher than what it would cost you to repair your credit. Now, of course, there's a lot of different options out there for repairing your credit. I'm not telling you that you have to go with one option or the other if you want to fix your credit yourself, but you ultimately want to take some type of action when it comes to improving your credit standing so that you have access to the best financial resources. And this is going to be especially important in today's economic climate because the cost of everything is going up. So you're going to want to have these financial resources. And when you have bad credit, it's going to be a lot harder for you to get access to essential things, whether that's housing, whether that's clothing, food, shelter, whatever the case may be. You want to have access to these financial resources because your quality of life can diminish. If anyone is looking for a good resource to repair your credit, you could definitely check out Crown Credit Pro. They're one of the best companies in the business. I've dropped a link in the description of the video. There's a lot of other companies out there. That's just who we've worked with, and they've been able to deliver a lot of results for subscribers as well as clients, as well as myself, right? I've worked with Crown Credit Pro personally, but at the end of the day, you don't want to sit around year after year having bad credit because there's a huge opportunity cost. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section below. And until next time, take it easy and we'll talk to you soon. Peace.